Right, good day to you all. We're now on our fourth webinar. 3 were before the Brexit, and now we've had the Brexit. We thought that we would meet together and just capture some of the big points. Brexit obviously had a huge impact on sterling. In fact, sterling dollar fell from 150 down to 132 in that one day following the June 23rd, so Friday, June the 24th. That's the equivalent to a whole year of volatility for sterling dollar. The average range for sterling dollar going back over the last 10 years is 12%, and that's exactly what we saw in one day. Sterling euro likewise, sterling came off quite aggressively against the euro, less so than against the dollar. We were close to 130, and if you look at the Brexit barometer, we talked about the green zone if we remained in up to 135. We talked about the amber zone, and that if we were to exit, we'd fall into the red zone, and that's where we are at the moment, at the top, towards the top end of the range of the red zone at 117. So big moves for sterling, and needless to say, big moves on the political front. So what's been going on there, Andy?
Yeah, absolutely. Well, of course, we've had a new Prime Minister following David Cameron's decision to resign on the back of the Brexit vote. So Theresa May, who said Brexit means Brexit, so she intends to follow through with the will of the people, even though she necessarily wasn't with the vote to leave. Mm-hmm. But she's appointed a new Chancellor, Philip Hammond,
yes,
who has been quite vocal in terms of talking about what the Treasury can do to support the economy. We've heard a lot about the economic shock factor of Brexit, and therefore he's been quite vocal about talking about measures that the government can put in place to try and ease some of the economic shock. So these might take the form of cuts in corporation tax, possibly individual tax rates, or sort of more wider measures such as VAT. So those are some of the measures that we expect to hear in the autumn budget. On the Bank of England side, of course, steady leadership from Mark Carney, yes, crucial at a time such as this, obviously. And a lot's been made of that fact. And of course, very topical because just last week he introduced some monetary stimulus measures. So 0.25% rate cut, so rates now at a record low, 0.25%. And also announced the restarting of the quantitative easing program. So that will be to ensure that banks continue to lend, that we continue to see borrowing costs kept down, which was one of the impacts of the problems in the 2008 financial crisis was obviously bank lending. So it's good to see those measures in place, and obviously that will support and offset some of the downside economic sentiment that we're seeing at the moment. So taking all of that into account, what do you think are the sort of some of the positives and some of the negatives following?
Well, yeah, the positives are sterling is now more competitive, which is a good thing for the economy. It's come down quite a bit.
It has a bit of an impact on inflation, though, doesn't it?
Yeah.
And the Bank of England talked about that.
Yeah, absolutely. Further out, it will have an impact on inflation. Reason being is that we have to pay more for our imported goods. So that's the benefit. The stimulus from the Bank of England is good. The constant leadership from the Bank of England is good. And just general, the fiscal thing, the interest rates, everything together, I think will help stimulate the UK economy, but it will take time, and it's the negative is the uncertainty. Until it's going to be defined how our relationship is going to look with the EU, there's going to be this uncertainty hanging around sterling, so we just need to be wary about that.
Yeah.
But the good news is that sterling as a currency is completely liquid, albeit at these lower levels. It's trading very comfortably down at these levels. And therefore we haven't got continued high levels of volatility, so corporates can cope in the current environment. Just need to get used to the weaker pound for now.
Absolutely.